Ever feel like the market's kind of, messing with you, like it's all random and impossible to predict? Well, today we're diving deep into a system that says it can actually crack the code, so to speak. The ICT method.
And the good news is it's not about like secret formulas or anything too out there. ICT, it's all about, having a solid plan, really understanding why the market moves the way it does. And yeah, gotta love this managing your risk like it's nobody's business.
Okay, so no need to become a market psychic, but we are talking about algorithms here, right? This whole idea that the market's moving to a pre-programmed beat. What are some of the things ICT says this algorithm really keys in on?
Timing. Timing, timing, timing. ICT is all
Yeah.
about those specific times of day. He's looking at 8:30 a.m. Eastern, 9:30 a.m. Eastern, and then again at 1:30 p.m. Eastern. Those key inflection points. He calls these pre-programmed macros, almost like predictable sequences that the algorithm likes to follow.
Okay, I'm hooked. What's so magical about those times specifically?
Well, think about it. 8:30 a.m. Eastern, that's when the news really starts flowing, right? After the embargo lifts, then 9:30 a.m. Eastern, bam, equity markets open, things get moving. And 1:30 p.m., everyone's back from lunch, maybe a little sleepy. These are moments when traders are, in a certain headspace, predictable moments that the algorithm can, in a way, exploit.
So it's less about like the actual numbers on the clock and more about understanding the natural ebb and flow of the trading day, right? Those moments when people are primed for action.
Exactly. Just like, say, a savvy shopper knows the best deals pop up at the end of the season, not the beginning, ICT's tapped into the market's own internal calendar. But, and this is key, just knowing when something might happen isn't enough to make a good trade. You also got to know where the action's going to be.
Makes sense.
This
So
one.
how do we figure out the where part of the equation?
That's where liquidity pools enter the picture. Now, it might sound kind of technical, but stick with me. Imagine a swimming pool. The deeper the pool, the bigger the splash, right? Well, in the market, those pools are areas where all the big orders are hanging out, the whales ready to make a move. And ICT argues that the algorithm is drawn to those pools because, well, that's where it can have the biggest impact.
So instead of random price swings, it's more like the algorithm's a shark circling for the densest school of fish.
You got it. And if you can anticipate where those schools are going to be, especially at those key times, well, that gives traders who understand the algorithm a serious edge. For example, let's say it's 8:30 a.m. and the price is just kind of hovering above that midnight opening price. ICT might see that as a potential setup for a move down toward a deeper liquidity pool on the sell side.
Okay, it's all starting to come together now. Time, liquidity, and understanding how the algorithm might use those factors. But how does ICT actually put this into practice, in a real trading situation?
This is where it gets really cool because ICT actually walks us through like a real trading day. Like we're right there with him watching the charts.
Oh, that's got to be way more useful than just talking about it generally, right? Actually seeing how he puts it all together.
Yeah, for sure. And here's the thing. He doesn't just like tell you what he did after the fact.
Uh-huh.
He actually lays out his predictions before the market even opens.
Wow, so he's really putting skin in the game there.
Exactly. He's not afraid to, show his work. He actually mentions using Twitter to share his pre-market analysis. And he timestamps everything.
Smart move. So no one can say he's changing his story after the fact.
Right.
Okay, so let's get into the nitty-gritty here. Give us an example of what one of these trades might look like.
All right. Let's talk about what he calls the bearish breaker. So picture this. The market's been trending down all day, right? And then around 1:30 p.m., it starts pushing up towards a certain price level.
Okay, I'm seeing it.
And we know this level is probably a liquidity pool.
Right, where those buy orders are stacked up.
Exactly. They're all hoping to catch that reversal.
It's like the algorithm is dangling, that perfect pitch right in front of the batter.
Totally. And that is the bearish breaker in action. The price breaks up into that liquidity pool, maybe even takes out a recent high.
Sucks in all those buyers.
Yep. And then boom, reversal city population. Ouch.
Yeah, that's gotta hurt if you're on the wrong side of that.
Yeah. You don't want to be holding the bag when that happens. But that's why understanding the context is so important. ICT always emphasizes that this bearish breaker setup, it really only works in a market that's already got that bearish feel to it. You know what I mean?
So you can't just blindly follow a pattern. You gotta look at the bigger picture.
Exactly. You got to read the story that the market is telling. And this is where ICT's discipline comes in. Because even when he's in a winning trade, he's all about taking profits early.
Really? Why not just let it ride? Isn't that leaving money on the table?
It's tempting, right? I mean, who doesn't want to squeeze every last penny out of a trade?
Yeah.
But YCT will tell you that's how a lot of traders end up giving back their gains. You get greedy, you get emotional,
Yeah.
and it all goes south. He actually mentioned his son is a trader too, and he aims for just 5 points profit per trade.
5 points, that doesn't seem like much.
Maybe not at first glance, but think about it. Hitting those smaller targets consistently, it builds confidence.
Mm.
And more importantly, it reinforces discipline and over time. Those small wins, they add up. Slow and steady wins the race.
It's funny, with all the training systems and gurus out there,
Right.
what always kind of sets ICT apart for me is he's not just about like throwing a bunch of charts and patterns at you and saying, go make millions.
Right. He's not into just giving you the what. He wants you to understand the why.
Yeah, exactly. He wants you to get inside the head of the market, even if that market's brain is basically a sophisticated algorithm.
Totally. He talks about these things called short-term runs on liquidity, which sounds complicated, but it makes so much sense once you get it. Remember those liquidity pools we were talking about?
Yeah, those areas where the big players are hanging out, right?
Right. So picture this. The algorithm starts pushing the price higher and higher toward one of those pools. What happens?
Well, all those buy orders that are sitting just above the market, they start getting triggered.
Exactly. And that buying pressure pushes the price even higher, maybe even sets off some stop-loss orders, which just adds fuel to the fire. And then, just when everyone's convinced this thing's going to the moon, bam.
Rug pull. The algorithm reverses course.
Exactly. And all those traders who were chasing the momentum, they get caught holding the bag.
It's like the algorithm sets a trap, and once enough traders fall for it.
It springs it. And the thing is, these patterns, they repeat. So once you understand the game, you're in a much better position to, avoid those traps, maybe even profit from them.
It really highlights how important it is not to just trade on autopilot, right?
Yeah.
Like, you got to understand the why behind the moves.
100%. And that kind of leads into another big thing with ICT, the mental game.
Ah, yes. Trading psychology. The great equalizer.
For sure. One minute you're feeling like a genius, the next minute you're ready to quit trading and, I don't know, open a lemonade stand.
Been there.
It's all about having a plan, sticking to it, not getting too high on the wins or too low on the losses.
And that ties back to his whole thing about taking profits early, right?
Yeah.
Don't get greedy.
Exactly. Manage those emotions. He also talks about taking breaks, stepping away from the charts, just to clear your head, get some perspective.
Which I think is crucial because the market can be all-consuming if you let it be.
No doubt.
So if someone's listening to this, soaking it all in, what's the one thing you really want them to walk away with?
That understanding the why behind the market's moves, especially with algorithms in the mix, is just as important, if not more so, than the what. Because once you understand those underlying forces, you can start to see opportunities where others just see chaos.
Well said. And for our listeners, here's a little something to chew on. If these algorithms are basically designed to exploit predictable human behavior, could the key to outsmarting them be, well, to become less predictable ourselves? Something to think about. Thanks for joining us for this deep dive, everybody. We'll see you next time.